Good morning, everybody. It's the live market open for Monday. Happy Monday. It's May 2nd. I hope everybody is doing well. The morning show is back after a week off. Hi, everybody. I'm Yohay, Elam, a Forex Crunch and Market Movers podcast for those who don't know me. And I'm doing the show as usual for FX Street. As always, we'll cover recent developments in markets, talk about various charts and levels, and the next moves expected in markets, the next 24 hours, and of course your questions. If you cannot see the chat alongside the video, please go to the address here, tlk.io/fxread-live-video. So what's going on in markets? The US dollar remains in the back foot. It had a terrible week last week. The Federal Reserve is in no rush to raise rates, okay? And even though they remain optimistic, so in this scenario, other currencies can party against the US dollar. More in particular, the dollar-yen pair is consolidating the big gains. It's, of course, not related only to the US dollar, but also to the fact that the Bank of Japan did not act last week. And we've seen some catch-up in Nikkei in Japanese stocks. Okay. Another thing that we had some polls about potential Brexit in the United Kingdom, and the polls show a very close race, but they still, the pound doesn't really care. The pound thinks, traders think that the UK will stay in, and we had a big relief rally. So, yeah, at the moment, nothing is happening. That's right. So, good morning, Ralph, and good morning. Hello. Anyway, that's what's going on. Let's look at the charts, because we do have one interesting move in the world's most popular currency pair. So euro dollar, we talked several times here about the 114.60 line. We did have a breach this morning. The pair reached all the way, made a move to 114.80. Okay, so but as with many cases in euro dollar, this could be a fake out. Okay, this could be a false break. Anyway, the next level to watch is 115, the very round number. Let's talk why 114.60 is so important. First of all, around this time last year, after the big crash, 114.60 was 1,000 pips above the 104.60 low, and it was a line of resistance right here in the middle of May. Then it worked again several times last year, and also recently, including Friday. From Friday's close, it was, and also in the previous weeks, 114.60 continued capping the pair. Okay, if we do go higher, 115 is the next line of resistance, and then we have the swing high of August 2015. Okay, so we did have in one occasion a big break above this level, but that was when markets went crazy at the end of August. Okay, so we had the pair reaching 117.12. Anyway, I'm watching with a lot of caution this break, and for a few reasons. First of all, in euro dollar, we had many cases, breaks that were fake. Okay, false breaks are very common. This is quite a problematic currency pair. Okay. Secondly, there's lots of trouble in the eurozone. First of all, against the euro, we have 80 billion of QE going. Money printed by the ECB every month. Okay, this enhanced program of printing euros, of buying bonds, at corporate bonds, began in April. They announced it in March and began being implemented in April. I think it could have more of an impact. Okay, another thing is that also, if you look at future ECB policy, although they don't really want to act, they want governments to do more, and there's lots of criticism on the ECB with low inflation. And we had figures coming out last week on Friday. Doesn't look good. Okay, so we have a drop of 0.2 in headline inflation, which is known. Okay, Draghi did say that inflation could fall, but he also did say that but core inflation also dropped back to 0.7. Okay, after the corrected German figures, we had Germany coming out with one number, and then they found themselves correcting it. Anyway, with not so good data in the eurozone, especially inflation, we could see the ECB acting now. GDP growth is positive. It came out better than expected last week at 0.6, but this came on the back of low inflation. Same thing that happened in Greece, same thing that happened in here in Spain where I'm sitting. Okay, I see a few comments. Swiss retail sales coming. Yeah, I can mention that, but it doesn't usually have a big impact. Euro dollar is dropping. Yeah, it made a break. Currently, it seems like a false break above 114.60, and now we're back to the previous range. Further support 114.10 and 113.35. Okay, these are the ranges we had beforehand. Okay, let's continue. Well, if you mentioned some events, let's look at here's the calendar. This is the FX Street, calendar on Forex Crunch. So Swiss retail sales, yeah, where is that? Yeah, expected drop of 0.2. As we know, there's the Swiss franc moves more according to the S&B and market speculation. Now today it's a holiday in the United Kingdom. Okay, it's a bank holiday over there, so we might see a bit of a lighter movement in markets. But anyway, it's worth noting that we are seeing some moves. Anyway, let's continue with more currency charts and then talk about other events. Pound dollar. As I said, the referendum in the United Kingdom, it doesn't seem to matter too much for the pound. Okay, so we had an ongoing extension of this rally. This morning, 146.34. We're currently at the highs. We already, we got closer to 147. Anyway, we're seeing quite a huge rally. Okay, we had a bounce from 140 in early April, then a move to the upside, another move. All in all, the pound is enjoying speculation about no Brexit. Economic figures released in the United Kingdom are not so good. GDP has slowed down as expected. Employment has turned worse, but at the moment, the pound doesn't care. We might see less movement today in the pound because of the bank holiday. Anyway, 145.80 to 146.50 is the current range. It's nice to note that 145.80, which was a line in the past, returns to its roll right now. Dollar yen, of course, this is quite a drama. Before I went traveling, before I went on vacation, the week and a half ago, we had a very dramatic Friday morning. We had Bloomberg reporting that the Bank of Japan is considering lending money to banks, okay? Lending money and paying banks, actually, okay, with a negative interest rate in order to boost spending, to boost credit. That's what sent dollar yen from this range of 109, 110 all the way to almost 112. We stuck there for quite some time, and then last week the Bank of Japan made its decision. No change in policy, huge disappointment, an enormous crash of around 3%. It extended. It began on Thursday morning and continued into Friday. Currently, we're seeing some kind of consolidation, okay? So let's add some levels here. To note, currently we're at 106.50, okay? So the low has been somewhere around here, 106.10. It's a provisional line of support. Of course, 105, we'll talk about that soon. Anyway, resistance, weak resistance is somewhere here at 106.90, maybe 107. Now, there's been a lot of talk about where will the Bank of Japan intervene. Okay, so let's talk about the lines first and the problematic thing about intervening. So some banks assume it'll be 105 because it's a round number, and some say that dollar yen will go below 100 before the Bank of Japan intervenes. Okay, I think it was Morgan Stanley that it'll lose actually one digit. I think that they will not be in any rush to intervene unless they see the markets turning around, okay? It's easier for a central bank to intervene and also for traders to go with the trend. If dollar yen is falling, if the yen is strengthening too much, the markets will defy them once again. Remember, during the first months of this year, we had the Bank of Japan announcing negative interest rates that sent dollar yen very high to 121.50. But markets said, okay, the Bank of Japan is not really serious. They began buying yens once again, and we had it crash to much, much lower levels. Okay, so it'll be easier for them to intervene once the dust settled, once dollar yen, or the yen in general, it changes course. Okay, so at the moment I don't see this happening quite soon. In addition, they don't have support for any kind of intervention by other powers. Of course, Japan is the number 3 economy in the world. Number 2, China, right next door, are critical of such moves. And of course, the United States, number 1. They're always vocal about this. So direct intervention is probably not the way to go. So we might see markets, after this period of consolidation that we're seeing right now, make another attempt to move against the dollar, the yen. Okay, let's. Was a very dramatic move on Thursday last week, because we had the Federal Reserve. I hardly mentioned that. Let's talk a bit about that. Last week's big event was the Fed decision. I did pop out from where I was traveling, and I covered it with Valeria Bednarik of FX REIT. And the Fed, on one hand, it was optimistic. They removed the reference to global risks. They're not worried about China, at least officially, anymore. They don't see it as a big issue. Financial conditions have improved. Stock markets have gone up. Things are looking better, okay? But on the other hand, when they did not give us a hint that they're going to raise rates in June. On the contrary, when they did raise rates in December, we had, before that, in October, they were talking about considering a few factors towards the next meeting. Wink, wink, that was a big hint that they were going to hike in the next meeting. This time they were talking about the next few meetings. They seem to be in no rush. Of course, data can improve from now until mid-June, until they make their meeting. But we do know that they do factor in the chance of a Brexit. The United States, the IMF, many other countries, organizations see the danger of the UK leaving the EU as a danger for all the global economy. Okay, I think the biggest danger is not for UK trade relationships with the EU and other countries, but rather it'll be sort of the beginning of the end of the European Union, and that could be an issue. The chances remain low, but the Fed will not want to act 1 week before the UK votes. Okay. Anyway, so that's what we've seen. What I talked about on Wednesday evening, we had the Federal Reserve go, well, relatively optimistic, but not hawkish at all. Okay, no rush to raise rates, and just a few hours later, the Bank of Japan did nothing as well. So, and that's what triggered the huge move in dollar yen last week, and of course some yen crosses. Let's continue with more currency pairs. Canadian dollar is enjoying higher oil prices. Okay, WTI crude oil is at 45.60 as we speak. Here we're hugging. We found support around 125. Now we're 125.50. It used to be some kind of support, but 126.30 is the next line of resistance. I would say, let's remove this line. But 125, which is round number, works very nicely as support. Okay, Aussie dollar currently at 76.10. Last week, 2 weeks ago, we had very poor. No, last week we had the Australian inflation figures. They came out terrible. Okay, they came out showing a deterioration in inflation. And that triggered speculation that the Reserve Bank of Australia will cut rates. We'll cover the events for today soon. It comes out in the next 24 hours, basically tonight or early tomorrow morning. Currently at 76.10. 76 is support. More support at 75.30 and resistance at 77.40, followed by 78.40. Okay, Kiwi dollar. This week it's expecting milk prices. currently just under the round 70 level. I wouldn't call 70 a line of support or resistance because it has been passed through so many times. I would look at 69.50 and 70.50 as lines to look at. Further support 68.20. Okay, dollar Swiss. Of course, what we're seeing here is the fall of the US dollar more than anything else. So currently in just under 96. 96.40, I still see it now as resistance as a separator of ranges. All right. 95.20 is some kind of support. Euro Swiss, of course, this is the pair that the Swiss National Bank cares about. Of course, it's happy with the strengthening. The Swiss are happy with the strengthening of the euro. Currently, just around 110. Okay, here we are. 109. Anyway, this is a very slow-moving pair. Pound, the euro against the pound. We did find support here at the historic line, I would even say, of 77.40, a line that is held so many times. And now we're at 78.30. After this fall, we had a round move back to the upside. 78.30 works as some kind of support. Anyway, resistance at 79.30, which proves itself several times. And yeah, 80.20 on the upside. Further on the downside, we have 76.60. Okay, euro yen. This clearly reflects the big move in favor of the Japanese yen. Currently, we're just under 122. A big fall from here, from 126.50 all the way to 121, almost 50, which is a line of support right here. Okay, yeah, around here. And 123 still works as resistance on this cross. Pound yen, 155.60, moving a bit to the upside now. Also here we're seeing a big move thanks to the weakness of the Japanese yen. So we did reach resistance at 162.50 last week before crashing, a spectacular crash all the way down. Even though the pound looks good, the yen was just surging. Support at 154 followed by 151.80. Resistance 158.50 and 160. Okay, and let's just take a look at oil prices. We almost reached 47, consolidated above 45, which is support. So this is the range I'm looking on a WTI crude oil. Okay, this is the roundup of currency pairs. Your questions on any currency pair are welcome, either the ones I talked about or other ones. Okay. Okay. Let's continue with yeah, we talked about all these things. Dollar remains in the back foot. Fed remains optimistic, no rush to hike. Okay, let's look at events we had last week. Okay. We mentioned the Eurozone GDP went up 0.6, but on low inflation, 0.2 minus on the headline and plus 0.7 on the core. GDP in the United States does look poor, 0.5% annualized. At least it had a few silver linings. Let's talk about that. So we all knew that US growth in the first quarter was terrible. It came a bit under expectations. The expectations stood on 0.7. What we did have is a few positives: that consumer spending rose more than expected, 1.9 instead of 1.7, and that's a good motor of growth. And we know that inventories, they fell. And when inventories fall in one quarter, they tend to be replenished in the next one. So that gives us hope for a better second quarter. Anyway, it did not move the market so much because we had the Fed decision before that, okay? Fed decision was Wednesday evening and GDP was Thursday afternoon. Today, we have Eurozone manufacturing PMIs as we speak. Okay, let's look at that. These are final. Well, for Spain, we already have the number out. It came out slightly better than expected at 53.5 instead of 53 expected. we have the figures from Italy later on, and then we have the final figures for France, Germany, and the Eurozone. The most worrying thing is France, most worrying country in this sense, currently at 48.3, expected to remain unchanged, okay, in the final read. And that's, of course, in contraction territory. Any figure under 50 means that the sector is contracting, that things are not looking good, okay. We have later on a speech by the German president of the Bundesbank, the German central bank. He'll be speaking at 9:30 GMT. That's 11:30 here in the old continent and 10:30 in the UK. In general, he's been critical of some of the ECB's policies, but on the other hand, he wants the institution to remain independent, not listen to political pressures, especially from the German finance minister Wolfgang Schäuble. More importantly, we have at 2 GMT, we have his boss, the boss of Weidmann, or in the ECB at least, Mario Draghi speaking. The speech is not related to monetary policy. So in theory, it could be a non-event, okay? But Draghi does tend to move markets, even if he doesn't say anything. There's sort of commotion around this event, and we could see movements in euro-dollar. Now, given the current strength of the euro, he might want to say something to push it down. I don't know if he can do anything. Anyway, I don't think it'll be a big event like a usual Draghi speech, or of course what he says after a press conference, but it's still worth watching. And perhaps more importantly, at 2 GMT, we have the ISM manufacturing PMI. It's a gauge of the manufacturing sector in the United States. In the United States, ISM has more impact than market. Anyway, we do have the final market figure at quarter to 2 GMT, but then the ISM manufacturing PMI is important for 2 reasons. First of all, we want to know how the manufacturing sector is doing. During many months, it has been in contraction mode. People talked about a recession in the US manufacturing sector, and it did come back above the 50-point threshold. Now it's expected to slide a bit down from 51.8 to 51.4. Okay. And another reason why we're looking at it, because it's the first hint towards Friday's non-farm payrolls. If the ISM manufacturing PMI looks good, it implies good stuff, a positive jobs report, and especially the employment component gives us a better hint. Okay, so that's probably the main event for today. Okay. We also have John Williams of the San Francisco Fed speaking at 9:30 GMT. He has less impact, so probably not a big event. Perhaps more importantly, as the events we have during the night or early morning. So for those of you awake at night and trading the Australian dollar, we have building approvals at 1:30. That's just a warm-up for bigger events. 15 minutes later, we have from China the manufacturing PMI, the independent measure, okay, the Caixin measure. It's highly regarded, given the suspicion, especially about official figures in China. So it's expected to remain low. Expected to remain showing contraction, ticking up just a bit from 49.7 to 49.9. Okay, and we know that Australia depends on China. Australia exports metals that China imports. Okay, and then at 4:30 GMT, or 6:30 in the morning here in Central European time, we have an interest rate decision from Australia. Now, as we see here, expectations are for no change, for Glenn Stevens and his team leaving the interest rate at 2%. But there is some chance, as I mentioned, that they will cut rates. Okay, why? Because inflation is a bit too low, and because the Australian dollar is a bit too high. They would like to have a weaker Australian dollar to push up inflation, okay, inflation of imported goods, and they would like to see Australian exports get a boost, okay? And regarding, so that's a consideration for cutting rates now. So I think Citibank expects them to cut rates. Most analysts don't expect them to act. I think it's closer to 50-50. So if we do have a rate cut, of course, it's negative for the Australian dollar. If we don't have one, I think it's positive. I mean, it's really more of a binary thing today. It's not that no cut is priced in and only a cut will be a huge surprise. All right. So I think it could be quite an interesting event. Of course, it doesn't only matter. I mean, we shouldn't not only look at what they do, but also what they say. So if they don't cut, but they say that they probably will cut next time, then of course it could hurt the Australian dollar. Anyway, it's quite an open event. It's certainly not a non-event. I would watch it carefully if, of course, you're trading the Australian dollar. Okay, let's go back to see other stuff we have. That's all the events we have for today. But as we didn't have shows last week, yeah. Let's talk about other events we have this week. Okay. Usually on Friday, for those of you that are new to the show, usually on Friday we do a preview for the events of the following week. So if we, on the agenda this week, not next week, today we have, as I mentioned, ISM manufacturing PMI, a speech by Draghi, and early tomorrow morning, a rate decision on Australia and Chinese PMI. On Wednesday, also in Australia, very busy week for Australia. We have the employment figures coming out of the land down under. But more importantly, for wider markets, we have two more big hints for the non-farm payrolls after today's ISM manufacturing PMI. We have the ADP non-farm payrolls, okay? That's, of course, the private sector report by automated data systems. Anyway, it's sort of a hint towards the big non-farm payrolls report on Friday. The correlation is not always straightforward, but we do know that it impacts markets. Yeah, and of course the ISM non-manufacturing PMI. That's a bigger hint, and we didn't have it last time. Okay, last time towards the report we had it on April 1st, if I'm not mistaken, and we didn't have any hints. The ISM non-manufacturing PMI is important. It has a very long name, but it basically is the services sector report, the situation of the biggest and most important sector in the US economy, services. The employment component there is usually quite telling about the state of employment. So that's quite a big hint. The services did not fall into contraction, contrary to manufacturing, but we do need it to go up to give us some hope, because the US economy suffered from very poor growth in Q4. In the fourth quarter of 2015, only 1.4%, and Q1 also looks terrible. The Fed expects Q2, and others expect Q2 to be positive. This is the first jobs report for Q2, and the first some services figure for Q2. Let's see if it's important, if it really moves markets, if it is positive, if it shows a rebound. Sorry, that's what I wanted to say. Yeah. So, and on Friday, of course, we have the non-farm payrolls. As in the case in many months, we had non-farm payrolls. I mean, the focus not on the jobs report, because jobs were quite steady and quite consistent, around 200K, sometimes a lot above that, sometimes a bit below, but generally the US economy is gaining jobs. The focus is on which kind of jobs, and more importantly, how much are they paying wages? Okay, we've seen wage growth move a bit up. It was in a very tight range between 1.9 and 2.3. We did see it move in several months in the recent months to 2.5. We needed to move higher because we know the Fed is worried. I mean, not worried about employment, happy with employment, seeing it getting close to full employment, but they are very worried about inflation, and well, they're also worried about stock markets and international developments. But regarding the Federal Reserve's mandates, there are two: inflation and employment. And employment is looking good, inflation not so much. Okay, so we need wages to go up because with higher wages we have higher prices. Okay, and also at the same time on Friday at 12:30 GMT we have the Canadian jobs report. For those trading the Canadian dollar, of course, it's important, but it's also messy. Yeah. Okay, I just saw that some an Australian entrepreneur said he's the man behind Bitcoin. Just some breaking news. Could be interesting, but anyway, yeah. Anyway, Craig Wright. Okay. Anyway, back to markets. Euro dollar is hugging the 114.60 level. Okay. 115 is resistance and 114.10 is support. Let's see if we do have a move above that. If we have a true break above it. Okay. Let's see. Also, we just had no, we didn't have. We have Italian figures coming out at 7:45 to 8 GMT. 7:45 to 8. Any questions? There is a bank holiday today in the UK, so markets and the show is a bit more quiet than usual. But yeah, not much happening. Let's talk about other stuff and then do the wrap up for today. For those of you new to the show, it runs around 45 minutes, and towards the end of the show, we do a wrap up, and then the full show and the wrap up are published for those who want to view it once again. We'll have a few more minutes until we move to the wrap up, so let's talk about other stuff. So we have we talked about the Federal Reserve, the Bank of Japan. It was a very busy week last week. This week is the first week of the month. That's why also a busy week because of the non-farm payrolls, the full buildup. But we also have a few vacations this week. We have, today it's a bank holiday in the UK, an extended weekend, Labor Day. Also, Japan has come back online, but China is on holiday, and later this week we'll have holidays in other countries. What happens when countries are on holiday? What happens in markets? In general, apart from Christmas and New Year's, we have continuous trading. So when liquidity is, when some countries are on holiday, we have lower liquidity in markets. What does this mean? It means that we can have long hours of boredom, of nothing happening in markets, of very, very narrow ranges. But then if we do have some kind of breaking news, it has a huge impact. One of the biggest examples I can give you is the OPEC meeting in November 2014. The US was on a Thanksgiving holiday. OPEC decided not to cut production. That gave a knockdown to the price of oil. And because liquidity was so low, it had a very big effect, negative effect on oil prices. I'm mentioning oil because oil has been sort of a driver of the mood in recent months. In many cases, yeah, it's boring stuff. I mean, it's boring markets, but in some cases, when we do have the breaking news, the impact is bigger. What can move markets that is not a planned event? Of course, we talked about releases we had last week, planned central bank decisions, GDP figures, you name it. But sometimes we can have things that are not expected. It happened many times in the past with the European debt crisis, and it can happen again now, because there is once again a deadlock with Greece on the next moves. The IMF wants more harsh austerity and debt relief. Greece wants debt relief and no harsh austerity. The European Union wants perhaps less harsh austerity but no debt relief. There is a deadlock. Everybody knows that the programs are worthless, that they are not working, but they don't want to deal with the problem, at least until the UK goes to the polls on June 23rd. Headlines regarding Greece, all these headlines about the credit event, a default, anything like that, emergency meetings, rumors about emergency meetings, all that can hurt, can move markets. Now, as we know from last year, the moves in markets at the moment, I think, of course, well, not of course, but at the moment, negative news for the Eurozone is negative for the Euro. I mean, it's more straightforward stuff. But bon dia, Sinatra. Good to see you back here. So I was saying that currently, negative Euro stuff, negative news regarding the crisis could be negative for the Euro and positive could be positive. But we've seen last year with Greece that when we did have bad news, we saw some repatriation, some safe haven flows, and we had a stronger Euro. And also the other way around, when we did have a deal with Greece in the middle of July last year, the Euro strengthened. The Euro weakened. Okay, Sinatra, I'm good. Yeah, I had a great trip. I was following markets. I was not totally disconnected. It was not a vacation, more of a travel in the west of Spain. And yeah, I did cover the Fed release. And I did follow markets. Anyway, good to be back, and good to be back again in a busy week. Good morning, Luca, as well. Good to see you back as well. Well, I'm looking to one side because I have different screens. Actually, I should look to the camera when I'm referring to you guys. Anyway, we had lots of action. I wonder if we'll have a break of if the break of 114.60 in euro dollar is real or not, and if the Bank of Japan will intervene. A hopeless intervention. They haven't been so successful in the past. Yeah, okay. So good morning again, everybody. I think, yeah, it's time, I think, for the wrap-up for today. Good morning, James. Well, okay, this is the wrap-up for the live market open for May 2nd. It's a Monday. Happy Monday. April is behind us. You sell the dollar in May and go away. Let's see, because the dollar, at least for now, remains on the back foot, especially against the euro that makes attempts to move higher. The Fed last week remained optimistic. Okay, they were positive on the economy, less worried about global developments, but no rush to raise rates. That killed the US dollar across the board. The yen, after a huge move on Thursday and Friday, is consolidating its big gains. We've seen dollar yen in range. We'll see that soon. Asian stocks are tumbling down. Japanese markets were closed on Friday. Now they're doing some catching up. And for the pound, Brexit polls remain very close and the newspapers released on Sunday. Polls released on Sunday, but the pound doesn't really care. It believes there will be no Brexit. And of course, with the weakness of the US dollar, everything looks good. Some key data points we had last week that are still having some impact. In the Eurozone, we had GDP beat expectations with 0.6 quarter over quarter, but with on the back of low inflation, at least in April, we had headline inflation falling to minus 0.2, and core inflation rising 0.7, only 0.7. In the US, GDP looks poor, only 0.5. At least there were some silver linings. Okay, events for today, we have Eurozone manufacturing PMIs, really market movers, because for the key countries, Germany, France, and for the Eurozone, these are final releases, not the initial ones. We have the Bundesbank President Jens Weidmann talking at 9:30. He might play his game of, on one hand, supporting the ECB's independence but criticizing some of the policies. Draghi speaks at 2 GMT, but it could be a non-event because it's not really monetary policy related. At the same time, we have a more important figure, the US manufacturing PMI, expected to stay to show weak growth. It's of course a hint for the non-farm payrolls on Friday. So that could be the most important event. Then we have a big night for the Australian dollar. We have Australian building approvals, and then Chinese Caixin manufacturing PMI, which is expected to move a bit closer to break even between growth and contraction. And at 4:30 GMT, very early morning here, the Australian rate decision. Okay, I have a question here from Luca. Do you think we have surprise coming from the RBA after weak inflation? I don't know. I think it's 50-50. On one hand, they want to support the economy. The inflation justifies a rate cut. The high value of the Australian dollar does justify as well a rate cut. On the other hand, they have a hot real estate market over there. And in addition, they might want to keep some ammunition. They might prefer just telling us there will be a rate cut next time, but not acting immediately, okay? In the past, they did surprise us with rate hikes, rate cuts when markets were not expecting them. In any case, I think nothing is fully priced in. No hike means the Australian dollar, no cut will, no change in policy, which is sort of more the default, but not fully priced in, will mean a stronger Australian dollar, and the cut will hurt the Aussie. But of course, listen to what they say about the future, not only the decision. Okay, so that's my opinion. I tend to see them talking about the cut next time than acting right now. Okay, let's look at a few charts. We talked about the critical level of 114.60 in euro dollar. We're currently above it. We reached 114.80. 115 is high resistance. 114 is support. Pound dollar finding its range here between 145.80 and 146.50. Dollar yen consolidating above 106.10 and 170. Dollar CAD also finding its range here, 125.50 at the moment. 125, the round number, proves itself as support for the pair. Okay, and 26.30 remains resistance. Aussie dollar, of course, awaiting the RBA. It could be stuck in range until we hear from Glenn Stevens and co. Anyway, 76 to 76.40 is the range. 75 is support, and 78.40 is high resistance. And the Kiwi dollar hugging the 70 level, 69.50 to 70.50 is the current range. With the euro, we've seen so many false breaks, so this could be yet another one. Okay. Well, anyway, that's the wrap up for today. It's good to be back. I hope we get this week the same action we had last week in markets. Okay. So Good to be back with all of you. I wish everybody a safe and successful day in markets. And yeah, and let's just take one last look. See if we have any movements in dollar yen. We did have this kind of spike, but no. Yeah, let's see if the Bank of Japan intervenes and where. Okay, so that's it for the show for today. Thank you very much, everybody, for coming. And I'll see you all tomorrow. So thank you and bye-bye.